Eric Muathe, Muathe.com, with US market analysis, pretty much which covers the weekend of January 21st and January 22nd, 2017. And I shall have some stock picks and cover the commodities also at the tail end of this video. Let's begin with the NASDAQ weekly. And what we see here is we are still seeing the market continue to show this look where we have improvement on a week-to-week basis and we have declining strength in terms of the technicals. This is a 2-year weekly. We can see that this line goes back to the highs on a 3-year weekly chart. So let's see that. And here on a 3-year weekly, the NASDAQ showing that it is still showing resistance on this line. Until we're able to move above this line, we start suspecting more than likely this is a market that wants to pull back because of this clearly defined resistance line which is coming in play. Don't forget that as far as the NASDAQ is concerned, we saw the NASDAQ make an improvement in day-to-day closing highs there, but the RSI did show resistance on this topside resistance line on the daily. But we can see from the Dow daily that the Dow continues to be resilient. As of the last 2 trading sessions, the market has come back and tested the RSI 50. We seem to be bouncing back above it. That's good. Generally speaking, whenever you hold the 50 line, it tends to suggest that it makes sense for you to go and test the highs, if not actually trade up. So as long as the Dow is bouncing on the RSI 50, the bulls are doing their best to stabilize the market, and as long as the 50 is holding on the daily, one can start suspecting a test of recent highs or maybe a move above that daily closing high for 2017, actually all-time daily closing high, and that possibility of a breakout also is now in play as long as the daily is holding above RSI 50. If we take a look at the Dow hourly, with about 2 hours to go before the close of Friday's session, we can see that the market pretty much is coming back to test the top side of its daily resistance line, of its hourly topside resistance line, so hourly resistance. Keep in mind on my charts for the hourly and 30-minute charts, I'm using RSI setting of 26. Just in case it looks a little bit different from yours. But what we can see here is that we are coming back and testing that topside line. As of the highs of Friday's session, the market hit that level and we've been down since. So hour to hour, we can see that the market is struggling to hold on to recent highs. The last time we tagged that line was here, which were actually the hourly closing highs for the Dow. So coming back and testing the same line, we seem to be stalling. We'll see how we close. If we take a look at the Dow 30-minute chart, same type situation here. We can see that there's a line connecting RSI highs. So as of the highs of Friday's session, we can see that the market came back to test the same line and was stalled. So as long as we are trading and finding it difficult to move above this line on the 30-minute chart and also on the hourly, we can see that the market is now seemingly sideways to down. As long as we are seeing the market struggle to hold above this topside resistance line. So if bulls want to push this market beyond current levels, they have to take out that line of resistance that has formed over the last couple of weeks. So if we take a look at the S&P 500 weekly, we can see just like the NASDAQ, S&P 500, and this is a three-year weekly chart. You can see the markets here made an improvement in week-to-week closing highs. But take a look at the top side RSI resistance. As of right now, we've hit that line twice over the last couple of weeks and months, and the market seems to be stalling, as you can see here. And this past 2 weeks we hit that level and now we are pulling back. So as long as the S&P 500 is struggling to move above this line, we can start suspecting yet again odds that what the market is trying to suggest is that the next meaningful direction is probably lower, as long as the market is finding it difficult to move above this well-defined topside resistance line. If we take a look at the S&P 500 daily, we can also see here that we made an improvement in day-to-day closing highs to an all-time daily closing high, but that came at the expense of the technicals. We made a lower high on the RSI. That negative divergence generally sets the stage for a pullback. But let me show you another view, which is the previous topside resistance line. Draw it something like that. And you can see that once we moved above that line, which is this movement above that blue line corresponds with this move, the market has been trading higher. We've come back and tested the same line on a back test, successful bounce for the lows there day to day. Recently, at the end of December 2016, we bounced on that line there, which is the lows here. And over the last 1 or 2 days, market seems to be holding this line, which is probably why it is holding up as of Friday's action. So as long as the S&P 500 can hold above this blue line, then we can conclude that the bulls are still in control. At some point, if and when we break below the support line, which is the blue line, then we can start looking for a deeper correction. Right now, market's coming back doing what it needs to do, which is holding support on a line that has been successful since about November. If we take a look at the S&P 500 hourly, we can see here some visual reason why the market seems to be in a tight range. You got topside resistance right here, and we got bottom side support. So we seem to be stuck in a narrow range. At some point, movement above this range, either for a breakout, which would be bullish, or for a short-term breakdown, which would be bearish, is pretty much what the market is going to have to decide. But for now, based on the hourly charts here, we seem to be in this narrowing range here. Topside resistance, bottom side support, which pretty much suggests sideways action for now. Don't forget the last time we made a high on the S&P 500 here, hour to hour, the market made a lower high, and that negative divergence could actually be the reason why we've come off the highs. But keep in mind, we've been saying that as long as the Dow is holding up above 69.1, so as long as the Dow is holding above 69.1 on its monthly chart, we should expect the market to be stable, if not outright bullish. And right now the Dow is holding above that threshold, trading at about 70. And I get asked a lot about this number here. And if you want to understand where 69.1 comes from, take a look at this explanation on my YouTube channel. Explains why I talk about that 69.1 threshold and why it's important. If we take a look at the S&P 500, as of right now, it hasn't yet claimed the level above 69.1. Okay, now this is a good chart to also show you why that is important. Take a look at, let's go take a look at a long-term monthly chart, about 13 years of data. Just want to show you the importance of holding above 69.1. Once S&P 500 jumped above 69.1 in 2013 here, take a look at this price breakout that corresponded with the RSI jumping above 69.1, and S&P 500 for the most part stayed above that threshold, which is this period here. And you can see the market went on a fantastic multi-year, multi-month rally. So holding above 69.1 is a key. And again, as long as the Dow is holding above that threshold, we have to assume that the markets are sideways to stable. If the Dow eventually rolls over and goes back below 69.1, then we can start finding more reasons to be bearish. And so the rest of the video is going to be for subscribers, where I'm going to discuss some stock picks, some ideas both bullish and bearish ideas. Take a look at commodities and see what ideas we can get out of that. For the rest of you guys, enjoy the rest of your weekend. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. And for subscribers, let's continue on.